Let's go through an example how to read Form 990, a required informational return for tax-exempt organizations. On the left, we have a Form 990 filing for the California Institute of Technology. And on the right, we have instructions for Form 990 with detailed information about each of the fields on the form. At the very top, box A provides the accounting period for the form. For organizations with fiscal years, the form year corresponds to when the fiscal year begins. For CalTech, the fiscal year started in October 2021 and ended in September 2022. Box B is important when the form indicates address or name change, filing of initial, amended, or final return. Box C provides the organization's name or doing business as information, the entity's EIN number, and the telephone number where the company can be reached during regular business hours. In Box G, we have a quick summary of gross receipts from Part 8. This number here is insane, over 4 billion. I had to check for the GDP of some of the small countries in the world, and there are many that have smaller GDP than CalTech's gross receipts. And CalTech operates as a not-for-profit organization. The first page of Form 990 provides a summary of key items from the rest of the form. Gross receipts are used to determine whether the organization needs to file the full Form 990 or the simpler Form 990EZ or electronic 990N called e-postcard. The calculation of gross receipts in Part 8 includes all revenue before any expenses and costs are deducted on lines 6B through 10B. Tax-exempt status and subsection are marked in Box I. The organization's website is listed in Box J, and the legal entity type or status is noted in Box K. To find the year the organization was formed, refer to Box L, and for the state of incorporation, check Box M. For example, CalTech was founded in 1891 in sunny California. Below, we move to a large section of Form 990, Part 1, called the Summary, which reports information from other parts of the form. Notice that this part would be completed last. Line 1 describes the mission of the organization. I see a reference to Schedule O. Form 990 can be accompanied by various schedules. Completing certain sections of Form 990 may trigger the requirement for a specific schedule. Schedule O is used to capture information that doesn't fit into any other schedule. It also provides explanations and additional details for various questions on Form 990. Here I see that CalTech's mission description is detailed on Schedule O and references Form 990 Part 1, Line 1. Same is true of the next line description on Schedule O, which refers to the number of volunteers listed in Part 1, Line 6 on Form 990. Each line item in Part 1, the summary, includes a reference to where it can be found elsewhere on the form. Few items of interest are the number of voting members at the organization listed on the lines 3 and 4. The total number of employed individuals is listed on line 5. And as we saw on Schedule O, estimated number of volunteers is entered on line 6. Now on line 7A, we have the amount of unrelated business revenue, which is only 39 million. I say only 39 million because we saw that the organization had gross receipts of 4 billion. Even entity receives unrelated income that doesn't support their main mission, they have to file Form 990T, Exempt Organization Business Income Tax Return, and pay taxes on it. That is listed on line 7B. Note that it is 0 here. You can pull the filing 990T by using the EIN for the organization, and even though the form is very complicated, what I was able to gather is that there were some net operating losses carried forward from years back, and a bunch of energy and other credits that CalTech receives. So based on this 990 filing, we have a $4 billion not-for-profit powerful entity that pays 0 tax. Crazy. For revenue, expenses, and net assets, you have a comparison between current and prior year. Line 8 lists contributions and grants from Part 8, line 1H, which refers to donations, gifts, and grants from the general public, individuals, government, foundations, and other exempt organizations, for which the payers didn't receive anything in return. Program service revenue from Part 8 also lists the income earned by the organization from providing the services, and in case of schools, like for CalTech, the tuition received. Under expenses, few interesting items to look at are the grants listed on line 13 and Part 9 of 990. Grants can be provided to domestic organizations, individuals, or foreign entities. Line 15 is also important as it lists the salaries on Forms W-2 or 1099 forms, wages, bonuses, severance payments, as well as employee benefits such as contributions to 401k or 403b plans, etc. Details for these expenses is listed on Part 9, separating the compensation by groups and type, as well as listing the amount for employee benefits. Line 16A shows the professional fundraising fee as 0, but the expenses listed in 16B exceed $9 million. To understand this, you need to refer to the supporting details in Part 9, column D. Here you will see that fundraising expenses are spread across almost all expenses listed in column A. Fundraising refers to the efforts made to solicit or campaign for contributions, gifts, and grants. The example highlights the nuance in calculating these expenses by allocating a portion of employees' salaries based on the time they spent on fundraising activities. Notice some significant items listed under other expenses, such as JPL, post-employment obligations, and endowment recovery, each in millions. These are custom entries, so they won't be defined in the Form 990 instructions. To find more details, you can check Schedule O, though not everything may be explained there. Often, other expenses are small for exempt organizations, but in this case, since it is over $1 billion, you would want to dig further into the supporting section Part 9, lines 11 through 24. You can see that the legal fees were over $10 million, and the investment management fees were over $14 million. A sweet gig for companies that work with nonprofits that don't pay any tax. The other fees under 11G is still $27 million, but no additional information in Schedule O because it didn't trigger reporting on it, as it amounted to less than 10% of line 25 in Part 9. Finally, despite having $4 billion in gross receipts, the organization's revenue minus expenses amounts to just $173 million. Many nonprofits and exempt organizations aim to avoid making a net income, as it could jeopardize their tax-exempt status. A significant net income could make the organization appear as operating for profit rather than charitable purposes. Finally, the summary net assets reports balance sheets items from Part 10 on 990. mainly the total assets and total liabilities. Take a look in Part 10 detail for each line item, such as in this case over $239 million in savings and cash investments, $147 million in pledges, and close to $4 billion in investments. I'm surprised that CalTech reports no intangible assets. As a brand, its name alone seems incredibly valuable. There's likely an accounting reason for this, possibly related to maintaining its nonprofit status. Also note the number of net assets that are listed without and with donor restrictions. The assets with donor restrictions are much larger and can include restrictions on time, purpose, or both. The next section of Form 990 uses a yes-no format. Based on your answers to each question, the organization will need to complete the corresponding schedules and sections. This process is simplified if you use tax software, as it will automatically generate the necessary schedules and parts for you. Finally, Part 7 of Form 990 lists the compensation for officers, directors, trustees, key, former, and the highest compensated employees. Key employees are those earning over $150,000, while the highest compensated employees earn over $100,000. For CalTech, the list is extensive. More details can be found on Schedule J. Another thing that people may want to know are lists of main contributors, which is listed on Schedule B, but it is confidential and restricted from the public. Since this filer is an educational institution, you can review its endowment on Schedule D, Part 5. CalTech's current year-end balance exceeds $3.4 billion, with $99 million in contributions, $30 million in grants or scholarship distributions, and a net investment loss of $500 million, which includes both realized and unrealized amounts. You can also view endowment balances for the past 5 years, including donor-restricted assets and assets held for the organization's exempt purposes and mission. Potential conflict of interest are listed on Schedule L, transactions with interested persons, that lists related individuals and companies. And Schedule R lists related organizations and partnerships, as well as the amount of income and assets that are controlled by the filer, in our case, CalTech. Finally, on Schedule M, you have a list of non-cash contributions. For CalTech, there was 75 donations worth $21 million in publicly traded securities. Wow, what a return! You can access a wealth of information about exempt organizations simply by reviewing their Form 990 and supplemental schedules. Thanks so much for watching.